Good evening, everyone. It is the evening of April 16th. The market has closed, and it was a rough day out there on Wall Street. The NASDAQ went down 3%, and it kind of climbed up a little bit. It could have been worse. It was down, I think, about 4% for the day, but then it climbed about 1% late in the day. The day was kind of put together to fall early. You had news yesterday that NVIDIA had to write off $5.5 billion of chip inventory that was supposed to go to China. And I heard an interesting comment from another um, analyst on YouTube, and that's that why couldn't NVIDIA just sell those chips to somebody else? I thought they had extreme demand for their chips, and they had a bunch of chips that were supposed to go to China, and then the U.S. government said, no, you can't send them chips anymore. So they couldn't, sell that inventory to somebody else, which kind of brings up the question, well, if demand was so high, couldn't you sell those chips to somebody else? Nonetheless, that was a bad piece of news, and the NVIDIA stock was um, destined to open lower. It opened up lower, like 4 or 6%. Then it went even further. It went down close to 10% in intraday trading, and it ended up settling in at around 8% down. The other negative story was coming out of ASML. They announced, and their earnings were okay, but their bookings number was low, and they couldn't give any guidance due to the tariffs. So I think that caused the market to be in a bad mood within semiconductor for sure. And that was the second piece of bad news. And we're humming along. And then the chairman of the Federal Reserve was speaking today, and he was at the Economic Club in Chicago, I believe. And his comments were interpreted as that he's not going to be quick to lower rates, that he needs to be sure that inflation is, put out, that we beat inflation once and for all. And I think that was concerning to the market where, okay, we're not going to be rescued by the Federal Reserve anytime soon. So those three stories, I think, drove the market down. And boy, when the market gets some bad news, it really sells off. So we're kind of paying the price that a couple really good years kind of set you up for, right? We went up nicely for a couple of years, and now we're having to give up some of those gains. Now it's a matter of continuing to think through, a portfolio and determining, okay, what's the best path forward. It's not about, dwelling too long on, last year and what worked last year. It's about, okay, what are the changes that an investor needs to make to capitalize on potentially discounted stocks or a market that's selling off. I've been trying to adjust. I've built up some cash very recently. I built up cash in late 2024, and then I started to run out, call it a week and a half ago, when we had that huge sell off. I was buying like crazy during this period where the NASDAQ went down 13%. I was buying just left and right. And then we recovered some. When we had this recovery, it gave me an opportunity to just thin down some stocks. I did sell some Bitcoin, some Ethereum. I found some cash that was excess cash in other parts of my accounts. And I was able to get a decent amount of cash ready to go. So I'm ready for the next move down. I've got some dry powder and I'm ready to go. We got to keep adjusting this market. If it keeps selling off, it means that it keeps selling stocks at lower prices and potentially at really good discounts. I am finding companies that are really good quality companies. It is absolutely a good time to be a value investor, an investor that looks at the value of the business, the intrinsic value of a business, which is the future cash flows of that business. These are healthy business, very good balance sheets. They're going to be around for the next 20 years. They're going to be cranking out cash, cranking out profits, growing the top line. And right now, they're just undesirable to the market. The market has certain, it's like fashion. Some fashion's in, some fashion is out. Some types of stocks, like for some reason, software companies are just really discounted right now. Healthcare companies discounted. Well, I'll buy them. Thank you very much. I love those businesses. High margins, high fat cash flows. I'll take them. So it's a good time to keep, you know, analyzing and investing in the right businesses. There's no silver bullet that's going to get us through the next 30 days. I don't know if we're going to be on this sell off for the next month, 3 months, 6 months, 9 months, 12 months. It's going to last as long as it's supposed to last. The good news is that it went down so fast that I'm hoping that it recovers just as quickly. We shall see. So the NASDAQ operated in the red, so did the S&P. And the S&P doesn't quite go as far down as the NASDAQ, but it's still, been dealt with, so to speak. And that S&P has a big weight of those big, massive caps, right? The Apples, the Googles, Amazons, Nvidias, and those have been losing value. So the S&P is getting a very, very big haircut as well. What is interesting that the Russell did outperform the NASDAQ and the S&P. That is interesting that the small caps kind of didn't go down as much. That is a little bit of a positive note on a terrible day. Crypto's been holding up okay. Bitcoin's been holding up okay. And we'll see how Asia and Europe trade. I imagine Asia is going to trade down because they're basically going to see what happened in the US, and then Chinese stocks are probably going to trade down. I did see Alibaba did trade down today. It sold off. So I expect that's going to hold, and we'll see a down day for Alibaba over in China. And Europe will probably go down as well, following that the fact that in the US stocks really dove. Although international stocks have been performing well compared to the US market. We have the US market is correcting, and at times the Chinese market was rallying, and then Europe's done quite well. So it's nice to have things change like that. That way it enables us to diversify. That's a good thing. So it looks like we've got a good number of people on the live stream. Thanks for joining. Zubio, thanks for joining. Appreciate it. Shadow Guy, good to see you. And Android PC Gameplay, good to see you. Impulsive Hamwich, great to see you. We'll go through. I've got a few stocks that I had in mind. If you would like a stock analyzed, there's 2 ways to go. Sign up, be a member of the channel. You can get to the sign up fairly easy. You go to the homepage on YouTube. You click on this guy here, and you can sign up whatever level you'd like. Or you could just pay by the drink. You can pay $5 super chat for a stock you want me to analyze. So go through, we'll look at it together. We'll do an evaluation, go through the intrinsic value of that company, look at the earnings per share, and see what that stock looks like in the valuation model that I've created. And take your pick. Either one would work for me. And we'll go one stock at a time. Looks like Anthony Ferguson, good to see you. Thanks for posting a comment. Appreciate it. Moving on to the heat map. It was bright red, and there was very little safe space. Other than energy looked pretty good today. It operated mostly in the green, which was good. And Med Device operated in the green, and United Healthcare slightly in the green, but everything else was sold off. The stock that's been selling off quite aggressively has been Meta, with the whole story of they being potentially broken up. I think that story is really holding the stock and bringing that stock down. Of course, Nvidia had their troubles. It brought down Broadcom as well as the rest of the semiconductor complex. Amazon also has been selling off. I have to think that these companies are going to have to change their tune when it comes to their earnings. I would be highly surprised if they double down on how much money they're spending in the data center. I think they're going to sell off hard if they come out with a, hey, we don't care that our financials look worse, that we're not growing as well, we're going into a recession. We're going to keep spending on that data center. I think if they come out with a story like that, I think they're going to sell off hard. But if they pump the brakes and say, hey, we're going to have a measured approach, we're going to slow down the capital spend in the data center, I think they're going to do better. But we'll see. They get paid the big bucks, so they'll make that decision. As we look at the sectors, there's materials again on top of the stack year to date. Consumer staples in second place, utilities. Healthcare slightly in the red, and technology way down here. Thanks to semiconductor, it really moved further into the red. So this is a year very opposite to 2024 and 2023, but in a way reminds me a little bit of 2022. We're just getting to lower levels much faster. I think we were kind of the market was setting up a pretty good fall. And now that we've had some stories that the market really dislikes, tariffs, principally is the story, along with a recession that we're supposed to have. So that combination is causing the market to really sell off. All right. So a couple of ideas, if you looking at where is a place to invest where there's a good chance to see appreciation over the rest of 2025, 2026. And the places I'm looking are materials, healthcare, and then highly selective in industrials, technology. Highly selective, because when you have a sell-off here in technology, there's certain pockets of technology that get sold off just really fast and without real merit or reason. They just get sold off. So it provides an opportunity to pick up a really good company that I've been watching. It just got sold off. I'm seeing stocks, 50, 55% lower in price over the last couple months. That's a really low, that's a big discount on a company. It's the same company that I was looking at a couple months ago. It's just priced far lower. So those are the kind of companies that I'm investing in. All right. So we've got that going on. We've got earnings going on. We had a couple of earnings after the market closed. We covered in the morning session, we covered ASML. We talked about Abbott and the slow growth, but Abbott did well today. The stock did well. Progressive had a really good earnings. Prologis is a real estate investment trust. It had an okay earnings, but the stock did trade down. US Bank had a good earnings. They expanded their book value, had good growth. But we have Kinder Morgan. I believe they're in energy. Open that guy up. And then CXX, I'm curious to see how are they doing, because they are kind of a barometer for the economy. If they're seeing growth, that's good. That means, hey, there's a lot of commerce that's going on. So let's take a look at that. And those are the ones I'm going to look at. So Kinder Morgan operates an energy infrastructure company primarily in North America. The company operates through natural gas pipelines, product pipelines, terminals, CO2 segments, and natural gas pipeline segments, owns and operates interstate and interstate natural gas pipelines. Okay. It's a pretty good size cap. Almost 60 billion. They announced the stock's really not moving. Today was down about 1%. And just some quick headlines. They missed their first quarter profit estimates. Okay, so part I think what they were dealing with is oil prices have been lower in early 2025. So the lower oil price, maybe there's less demand. And if there's less demand, Kinder Morgan doesn't get to charge as much, or they don't get as much volume pumped through their pipelines. So that might be part of why they're down a little bit. Their revenue is 15 billion, so not too expensive, 4 times sales. PE ratio is 23. That does seem a little expensive for this type of company. This is an infrastructure company in the energy complex. The energy complex is cyclical. You see how these guys, they have some years of expansion, contraction, expansion, contraction. And I would think that they would have a lower PE because an investor has to deal with this adversity. So it seems a little expensive to me. I currently own Oxy and I own Chevron. I've never been a big fan of these types of companies. I believe they pay a nice dividend, 4.27. And if you're looking for income, this is a pretty good idea. So it looks like, did they load the most recent quarter? Nope, they have not. This company, looking at their free cash flow, consistent cash flow. But the knock I would have is they haven't grown it a whole lot. You see that they've kind of plateaued from 2020 to now. It's about the same amount. Be nice to see it grow, but this is the energy business, right? You're really dependent on how much oil is being consumed, oil prices, how much is being produced, and so forth. So that is Kinder Morgan. How's the stock been doing over the last couple of years? So year to date, this one's not doing all that terrible, 1.64. And then over the 1 year, it's doing great, up 50%. Over the 5 year, up 87%. This should be a good holding, especially over the last year. It really went up, and you're getting paid that nice dividend. So if you add the dividend to that rate of return, you're above 100%. So this one did work for investors over the 5 year, and it really rewarded investors over the 1 year. It really took off really over the last 12 months, did really well. But that's the rear view mirror. The looking out the windshield, looking forward, I'm not sure they're going to repeat a 50% rate of return. This is a pipeline company. If we go into a recession, not as much oil is going to be consumed. Businesses will be slower. People will be driving less and so forth. So we'll see. We'll see how this one plays out. But it's not an investment that I'm overly excited about. I'm good buying into Oxy, and I already own a lot of Chevron, so I'm good there. So CXX, and let me comment on a few comments here. So it looks like Anthony, good to see you. Mohammed Shen. Do you make a video or live stream about valuation when you have free time? Sure. And I think you're asking like the step-by-step how to value a company. Yeah, I've got a couple on the channel. I know it gets a little hard to find them at times, but they are on the channel, how to value a company. I go step by step. And when I do the live streams, I try to go through, and when we analyze a company and really do it from scratch, you could see each step that I go through. But keep commenting. If you don't find the video on the channel, just keep commenting, and maybe I'll make a new one. So Anthony Ferguson, bond yields seem to be kind of stable the last few days. Do I think yields will rise? They rose a lot, and I'm expecting they're going to fall a little bit. Yields did pop up quite a bit, and I think that's what caused the U.S. government to back off on the tariffs, because they saw that the bond market did not like, there was a loss in confidence in the U.S., and the bond market was the measure. You see this rise here. It rose 50 basis points very fast within 1 week. That's really fast. And then they stopped the tariffs. Like, hold on a second. We can go from, on the 10-year, 4.5% interest on a 10-year note. But if people lose confidence in the U.S. government, that interest rate can have flown up to 6%, 7%, 8%. which would put mortgages, just with that move, it put mortgages up above 7%. It could have moved them to 8%, 9%, and then that would have caused a lot of collateral damage. So having a move like that, to me, I think worst case is it's going to go sideways and just stay at that level, but it's already given up, about 20 points from the height. And I think it's going to either stay there or probably come down. I would say by the end of the year, I expect the 10-year is going to be below 4, maybe 3.75, because the Federal Reserve is going to want to lower rates. If we go into a recession, that just naturally brings down interest rates. There's not as many reasons why interest rates would go up versus them coming down. I think there's a greater likelihood that they're going to come down. That's my observation of it. Herdo, good to see you. I hope you're doing well. And let me know if there's a stock you'd like me to check out. All right, so let's look at CSX. CSX is a rail company, and they do rail-based freight transportation. So they're moving big cargo around the country. And let's take a look at where they're at. So they traded down today. Not a big surprise. The whole market sold off. But in after hours, they're down a little bit. What's the headline tell us? Railroad operator CSX misses quarterly estimates as coal revenue falls. Okay, they didn't move as much coal. Okay. All right. And this one, I'd like to look at their investor relations and kind of look at the earnings, because I think I could draw something that would tell me just some clues of where the economy is and what should I expect for the rest of the year. All right, so here's the conference call. Let's take a look at. Hopefully this gives us a good read. So total volume. So this is the first quarter 2024 versus first quarter 2025. It's a 1% decrease. And that is a bit of bad news that, hey, this is one more clue that we're headed into a recession. Revenue went down. So with the decreased volumes, the rate went down. So they lost revenue two ways, volumes and probably price. Earnings per share came down. So earnings came down. All right. So this freight company is telling me that, yeah, the slowdown's real. Because a rail company, it's not like they're going to grow by 20% one year and then contract by 10%. They're going to grow and expand by a little bit and then contract by a little bit. But that little bit is telling me that, yeah, we have a slowdown. This is injuries. Hopefully they're a good, safe company to work for. I'm not sure what that is. So merchandise revenue came down 2%. So those are the big containers that we get our stuff, over to Walmart in. All right. Here's the coal revenue. It really contracted. So I wonder why coal contracted. Did we have a warm winter? We just didn't need as much coal. I know coal is used for electricity. Interesting. And here's where most of, I guess this is their CapEx plans. Here's where a lot of their rail lines are. A lot of it in the eastern part of the country. All right, let's take a look at this. Again, we had revenue going down 7%. Operating income went down 22%. That is a bummer. Yeah, that isn't good. Rail companies tend to hold their value quite well, but they're not overly exciting. They don't grow very fast. They make a little bit of money, and that's about it. Free cash flow did kind of come in close to where it was last year. So there's an element of a little bit of good news. It was just slightly lower. And there's their dividends. Dividends are just slightly higher. They did buy back a lot of shares. They're probably taking the opportunity of a lower stock price to buy back shares. That's good. That's good for shareholders. So the earnings on CSX is just one more sign that, yeah, we are probably headed into a recession. So it's a good time to buckle up at home, save some money, figure out how you can lower your living expenses. Maybe instead of going out to eat at a really nice steakhouse, and, having that $100 steak, go to a nice hamburger place and have a nice $10 hamburger, and take your loved ones out somewhere nice that is affordable. That way you can save up your money and you can buy discounted stocks. That sounds fun to me. Maybe instead of taking a big grand vacation this year, you can have a nice trip somewhere, but maybe spend half as much. Again, that way you have some capital to put into this market. Whenever markets sell off like this, I really get creative on where can I find cash to invest, because investing in a down market it's proven over and over again to be a good idea. You invest now, you wake up 2 years from now, cool. I had a rate of return of 20% per year on that money I invested. So that's why I want to find places or find funds within my accounts and my income. Maybe I can figure out how to make a little more money. And I encourage you to think along those lines. Make some more money, save some more money so you can invest more money in 2025 while stocks are down. All right, so that's interesting what CSX did, and we'll move off CSX. All right, so the comments are coming in. Josh, good to see you. It's not good hearing wealthy people are starting to tighten up. Yeah, I heard that like the top 10% or 20% make up like 50% of discretionary spend, or some ratio like that. So yeah, and I think wealthy people are tightening their budgets because the stock market. I mean, wealthy people have stocks, and when they see their, Apple stock come down 20-25%, they're like, whoa, hey, hold on a second. I'm not going to go buy another Louis Vuitton purse. I'm not going to, turn my car in early and lease out a brand new BMW. I'm going to slow things down. Give me some time to recover some of these losses on Wall Street. And I think we'll see when the real estate market, especially residential. I live in California, and prices of real estate in California have just stayed really high. It's been quite amazing how high real estate got in California and how it continues to stay high. I live in a nice neighborhood in Orange County, California, and a house sold across the street, and it sold for a giant price. Oh my God, man. I am so glad I don't have to buy that house. I would do it for my family, but I did that for my family in 1999. I bought this home and fixed it up, and my kids were raised here. It was great. But boy, it'd be tough to buy my own house again if I had to pay, market. That'd be a tough situation. So I'm glad I don't have to do it. But I think we could probably use kind of like the correction we're seeing stock prices sell off. We could probably use it in the real estate market. When you look at, the NASDAQ or the S&P selling off, it's a little bit of, hey, we're taking some medicine here. Okay. We can't have markets just go up indefinitely. Next thing you know, stocks are like, a gazillion bucks per share. Yeah, that would be unhealthy. So we're kind of taking some of this medicine and having this correction. Well, I haven't seen any correction in real estate for a while. Last time we had a solid correction was 2008, 2009, 2010. I think the trough in California was around 2010. And then real estate started to just ink up. Real estate's supposed to ink up like 2 to 3% a year. And for some reason, it was much better than that. And that's good if you own real estate. But if you don't, it's hard for people to buy maybe their first home, maybe to buy a home for themselves or their families. So it becomes pretty expensive. So having a correction in the real estate market wouldn't be all that bad for investors like myself in real estate. If you gave me better prices, I would buy more real estate. But right now, real estate's so expensive. I'll just hold my real estate and wait for a better market. So we'll see. We'll see if the stock market is gonna have an impact on the real estate market. The comment on wealthy people make me think that hey, wealthy people are probably also paying a pretty good mortgage on their nice expensive homes. We'll see, and that's maybe part of the shrinking of their budget. So Anthony, I agree with the desire to keep them low. Maybe a rating change. Well, so I think what you're asking is, will bonds in the US lose some of their rating? And potentially, I mean, I think there may be a little bit of loss of confidence, but I don't know that, other countries that want to invest in something stable, they don't have a lot of options, right? The US is pretty strong. Now, would they buy bonds with somebody else? I mean, it's possible maybe they buy bonds, I don't know, Chinese bonds, bonds in Europe, German bonds, UK bonds. I guess that's all possible. And then, the US Treasury would have to compete against other governments. That definitely could be the case, but I still think that US is a pretty desirable place to invest, especially for wealthy individuals and governments that want stability. The US can deliver that. And then coal essentially has zero value in the United States as an energy source. It's inefficient and the industry is highly subsidized. Yeah, you might be right. I wouldn't know, to be honest. I have very little knowledge on coal. I'm more of an oil guy. I did work in an oil company as an accountant. Got to know the oil business, the natural gas business, even the fertilizer business, because they convert natural gas into fertilizers for agriculture. So I got to know that industry, but I've never have been a knowledgeable person around coal. So I'll take your comments at face value. All right, so we've covered a couple of stocks. I wanted to cover a couple of stocks that I thought were interesting. One of them is Interactive Brokers. So in our community, we have this, we have Discord, and I don't know that he's on, but one of the investors said, "Hey, what do you think of Interactive Brokers, Interactive Brokers Group?" And I hadn't looked at it for a while, and I took a deep dive into it, and I just don't get why the stock sold off so much. They added many more account holders. That's good news. They grew their revenue. That's great news. And their free cash flow is like through the roof. So I was trying to figure out what is the market not liking. So let me open up their financials and show you what I'm talking about. Mike, the dividend investor guy. That's who asked me about this company. And when I looked at it, and then I'm like, okay, what did I do wrong? I'm like, this looks too good. But let's read this together and I'll show you why I'm like scratching my head going, why is this stock sold off so much? I don't get it. So first, the revenues, and this, it's good that they have a good, written kind of, this is what happened, but I like looking at numbers on a schedule, which I'll get to later. I think there was a schedule that I liked here, right? So business highlights, customer accounts increased 32%. That's really good news. Customer equity increased. That's very good news. Okay. When we look at their financials, this is the current year quarter, 2025, and then here's 2024. There's a very good expansion of revenues, probably about 20% on revenue, top line revenue. Okay, that's really good. Good job. And their profitability, their earnings per share went up. They may have missed, like, let's say they guided even better than that, but it's still a really good number. So I'm like, okay, well, that doesn't explain why the stock went down so much. When I look at other things, they have a good cash amount. They hold a lot of cash, but it's really their customers' cash here. I know when you look at stock analysis, it would show that, oh, hey, they have like 75, 80 billion dollars of cash. And it's like, no, well, they kind of do, but most of it doesn't belong to them. Only 3.5 billion belongs to them. The rest of it belongs to their customers. So be aware that stock analysis is great. It brings a lot of information together for us. And any other site like Yahoo or wherever, they aggregate data. But if you're going to invest your hard-earned money, go validate everything from the financials that the company is providing. Because if these numbers are wrong, somebody at that company is in a lot of trouble because they misstated their financials. So anyway, so good cash amount, and they have really no debt. They have short-term borrowings of 12 million, and they have 3.5 billion of cash. So really no debt. So that looks good. When I look at their cash flow, just really high amounts of free cash flow. So again, it left me with why did the stock sell off so much? Like, I don't get why this company is being sold off. Now, I'm going to I've already got this stock in my watch list. And I'm going to continue to watch it. And then maybe at some point I'll pull the trigger and buy some shares. I've done really well with Robinhood, but I mean, this thing is discounted like big time. And I tried to kind of take every path that is conservative, like looking at a 3-year average cash flow, not growing cash flow over the next 4 years, just really keeping it to the a conservative path on the free cash flow forecast. Even having done that, it just generates a high intrinsic value. These businesses, if they could keep growing, they make a lot of cash. It's basically you have a bunch of computers and people trade on them, and it's very profitable for Interactive Brokers. And they have cash, very little debt. So they're way above their market cap when it comes to their intrinsic value. And I think it provides a really nice discount to investors. So their stock price is really low. And I'm not sure I've got this right here. Let me double check. We have a stock price here. Yeah, this market cap doesn't seem correct. Give me a second and let me double check that. Yeah, market cap is. That looks correct. So I use these formulas, from Google Finance, and sometimes those formulas, they retrieve a stock price. In this case here, it retrieves a share count. This one, it was retrieving the market cap. It was retrieving the wrong market cap. So I caught that there. But the stock price is correct. It retrieves the right stock price. Looking at another screen, it looks correct. So they're just highly discounted there. And the earnings per share substantiate the stock price. So this is an interesting company. And I like their CEO, by the way. He seems like a really knowledgeable guy for a brokerage business. And yeah, I took a look at this one. This was kind of like, you know, how like when you go shopping in a store and you didn't go in kind of looking for something, but you see such a good deal on a product. Let's say, I don't know, maybe a toolbox, and you're like, wow, that toolbox is worth $500 and they're selling it for $40. Man, I can't resist. I'm going to buy it. That's the kind of feeling I have on this stock. Is it's really discounted. I wasn't looking for a company like this, but I'm going to put it on my watch list and keep an eye on this thing, because that's a really nice discount. And this guy is going to be there just waiting for me to pull the trigger. So that's Interactive Brokers. Came up today. I'm glad I took a look at it. All right. So, and then Shadow Guy. So one of those customers is me. That's right. You are a customer of theirs. Good deal. And then who audits them? I don't know. But it has to be like, if you look at their annual statement, it'll tell you who their auditor is. I'm sure it's one of the big ones. You're not going to be publicly traded and not be audited by one of the big reputable accounting firms. So, by the way, I showed 73.3 billion on market cap. That's interesting. Why am I getting a different market cap? Let's take a look. So, here is stock analysis. It's saying 17.21 billion. Okay. Now let's look at what Google has to say here. Yeah, Google's saying 66. So what's going on? All right, there is one way I could confirm. So I'm going to look at their balance sheet and then see how many shares they have, and obviously their stock price I can confirm. So So 108,664. Oh, darn. Yeah, this is correct. So picked up the right share count there. Stock price is $157 per share. Interesting. Well, we're gonna have to figure out which is which. Now, the market cap it was pulling was from Google. I guess we're gonna have to have a tiebreaker and go to Yahoo, because I confirmed the share count from their financials. So um, the share count is correct. It's 157. So market cap 66. There it is, confirmed. So 66.732 billion. So where am I getting different numbers here? So volume. So I'm looking at the balance sheet. The balance sheet will tell us how many shares are outstanding. So here's the share count. Okay, got it. So the share count is correct. So what is wrong? How come Stock Analysis has got one number and then these other sites have another? The mystery. Okay. Well, I got to go with. So if that's the case there. Huh. All right. I'm going to have to investigate that and figure that out. But the share count, the intrinsic value is based on this number. So I got to get the share count right and go from there. All right. But overall, it's still the intrinsic value is much higher than the higher market cap. I'll just have to get these details, and I'm getting conflicting data. And rather than going through it live on the air, I'm going to look into it. Yeah, so you're on Seeking Alpha. Okay, I'm gonna have to confirm that. All right, we found a bug. We found an issue with Stock Analysis, so I will get on this. All right, so that was Interactive Brokers. Another stock that I wanted to look at is Lam Research. It was doing well for a while up until the wheels fell off the semiconductor space, and now this, along with a lot of other stocks. I mean, it's down 9.82%. That isn't terrible, but it's not good either. It had sold off, and I thought I was going to pick it up and have a good stock that's discounted, and then the economy did what it did. And this year, it isn't doing terrible, but it's not doing well. Its market cap's 83, and this is very similar to ASML. They provide materials and machinery to the semiconductor space, and they have revenue of $16 billion. So not too expensive if you compare the price to sales. And then their PE is 19.8, not too bad. They are growing. They had a pullback, and then they're growing now. And last 3 quarters look really good. So the company looks good. It's discounted, but now semiconductors just getting hammered. And we'll see when it comes back. I'm not optimistic that semiconductor is going to work for a while. I think there's plenty of problems ahead. NVIDIA being kind of like the main target, but Broadcom's selling off. The whole space is selling off. ASML sold off today. What was the final on that? So they were down 7%. And they're down 8% for the year, 33.5%. So they, along with Lam Research, are down about the same amount over the past year. But these guys have good numbers. They have really good numbers, good cash flow numbers. They have grown their cash flow over time. I like seeing that. Clicking on the wrong one. Here we go. So not a perfect upward chart, but you could see that how we can draw a line somewhat up and to the right. So I like seeing that. But this one here, I didn't put a ton of investment in this. I'm glad, because I'd be losing my shirt. I don't have a lot invested in semiconductor right now. I got out of Broadcom and kind of stayed out thinking, man, the semiconductor space is way too expensive. And I thought I could start nibbling back in, and have lost a little bit of money on Lam. So that's how it goes on that one. I'm thinking I might close out the position and create a little more cash. If we have a nice up day, I might do that and just put it on my watch list. So Lam Research having a bad day, down 5% today. And I wonder if the market's selling off in the after hours. So, well, that's too early to tell. Yeah, Mike, have a good night. And you like ASML under 500. Yeah, I can understand that. But it might take a while for semiconductor to bounce back, because it is ugly in semiconductor. NVIDIA being the biggest stock in that space, year to date, it's down 22%. And if we look at the last 6 months, actually just the high point in 2025 to the current point, it's 30%. And when we had that big sell-off, it was down 34.66. And the stock did get down below $100. It got to $94. So this one's just getting hit hard. Its highest stock price was $149 per share, and it's down to 104. And the momentum is really for it to sell off. Yeah, and a couple bad stories coming out of the hyperscalers, and this one's going to really get down to $60 a share, $80 a share, somewhere around there, and that's going to be painful. I'm glad I'm not in NVIDIA. I'm glad I'm not in Broadcom, because Broadcom is also getting hammered. Year to date, it's down 24.69. From the top to the worst point, 27.6. It did really well as we closed out the year. From December 17th to now, it's down 30%, and it was down 41% at one point. So investors got hammered that bought on these highs. It's a really bad situation for Broadcom. And I think Broadcom is really overpriced. They rode the coattails of NVIDIA. They don't have anything special. They have very good product. But it's not like NVIDIA has a very special GPU. That's why they started just flying up in value. These guys are just a semiconductor company, good semiconductor company. And they rode up on the momentum of the semiconductor space. And I think the ride down is probably going to bring them back down to, I don't know, $100 a share or so. And that's probably closer to their intrinsic value. So we'll see how things sort out for Broadcom. But I think semiconductor is going to be a really tough place for investors. All right. So I'm through the list of stocks that I had. And if there's no other stocks out there, let me check to see if I covered everything. I think I did. Oh, one more thing that I wanted to cover is super investors. So super investors right now, I'm tracking 14 different super investors where I've kind of researched them, looked at their portfolios, whether it's Cathie Wood or Buffett. These are their portfolios they reported at the end of 2024, and they'll be updated. They'll do their 13F filings, and then I'll update these portfolios. But based on that information, right now, Guy Spier is just edged out Michael Burry for the top spot. Everybody's losing a little bit of money this year, And this guy, really down to earth guy. He's kind of um, a disciple of Warren Buffett and Charlie Munger. He ended up meeting with um, Warren Buffett. He split they Warren Buffett used to auction off a lunch with him, and then the proceeds went to charity. And this guy is out of Zurich, Switzerland, and interesting guy. Has a really down to earth point of view, and has a lot of his investing in the actual Berkshire Hathaway stock. Let me show you his portfolio. So he's heavy into Berkshire, which is doing really well. American Express, Warren Buffett owns American Express, MasterCard, Bank of America, and then Berkshire A class stocks. He owns Ferrari, Micron. This one's not doing well. And neither is B of A at this point. The worst stock in his portfolio is the Daily Journal. No, actually, it's Alpha Metallurgical. And this one here, he's friends with Prabray. They both got into this stock. He owns very few shares, but from a percentage perspective, that's probably the worst spot in his portfolio. But he's got, his number one position, Berkshire, that's doing well, 25% of the portfolio. So that's doing well. And actually, it's more than that. When you add the 25 plus the 8, you're up to 33, going on 34% of his portfolios with Berkshire. So good for him. He's outperforming the field, at least the field that I'm tracking. That's Guy Spier. So hopefully it gives you some, perspective that even these great investors are having a tough time this year. Guys like Warren Buffett, his portfolio down 11%. Druckenmiller down 11%. Einhorn, he's really smart and really good, down 13%. Ackman down 15%. Dorsey down 17%. So these great investors are having a tough time, and the S&P is at 10%. So let's not get discouraged. Let's figure out how we can better our portfolios so we can do great over the next 10 years. All right. So I wanted to stream since it was a terrible day on Wall Street, just kind of talk it through. Hopefully you guys found the content interesting. I appreciate you guys attending. Please consider becoming a member. It'd be great to have you. Some of the perks that we have, we're going to have an investor call later this evening, and we talk on a conference call. So you'd be invited to that. There's 3 total calls. You can attend all 3. You can attend one, as many as you'd like. You also get access to the tools that I use, the intrinsic value model that I just showed. Also, this file here, once a month, I update all the valuations I complete, and you have access to it. So you could, at any point in time, 24/7, is go look up a stock, and you could see what the analysis that I produced and the date that I produced it on. If it's stock that I've analyzed, it's on there. If I analyzed it, as of the 13th of April. So you get access to that, and you get access to a retirement model, and those are the tools that you get access to. And then on live streams, you can ask for certain tickers to be analyzed, and I'll gladly analyze them. And of course, you get invited to the Discord, so you can interact with the community all times of the day during the trading day. So consider being a member. It'd be great to have you. It'd be great to expand the community. We've been growing, which is good. We got a good number of members, and it just makes the community even better as we bring more investors into the conversation. So please consider being a member. All right, everybody. Well, that'll do it for tonight. Let's see what the market does tomorrow. Hopefully the market's much better than it was today. I've got my fingers crossed, but let's do something with this sell-off. Let's go invest right so we can set ourselves up so our portfolio maybe isn't going to set any records this year, But over the next 5 years, we can look back and go, man, I'm really glad I bought stocks in 2025 because they're really much higher. Just like in 2022, they sold off, and the stocks you bought here, you can look back 2 years later and really realize, man, that was a great time to buy stocks. So let's keep analyzing. Let's keep making good decisions in 2025. With that, everybody, have a good night. Thanks for all your support. Thanks for watching the videos, and thanks for attending the live stream. Take care.